every month that you are paying rent, you are paying a mortgage, just not yours. You're paying your landlord's mortgage. So when you're ready to stop paying their mortgage and pay yours, I want to help you do just that. Did you know that most renters don't continue to rent because they can't buy, but because they don't believe that they can? And also, there's this narrative out here that says it's better to rent than to buy. It's more convenient. You can move more easily. Or that everyone shouldn't be a homeowner. That's like saying everyone doesn't need income. You need a place to stay, right? So why shouldn't you own your place to stay? So today I want to talk to you about the top 3 reasons why you should be a homeowner. Number 1 is stability. Every month, when you pay a mortgage, you know exactly how much principal and interest you're going to be paying. You know what your monthly payments are going to be. Your principal and interest does not change as long as your interest rate is fixed. Now, granted, you might have HOA fees, homeowners association fees, if you have a condo or you live in a neighborhood that has an association, which sets out rules. Your taxes may go up a little bit, but that's going to be far less than it would be if you continue to rent. But think about it this way. When you rent, you have no control over how often the rent is going to go up. Statistically, rents go up $100 to $200 a year, depending on the market. So let's stabilize this thing. Secondly, equity. Equity, equity, equity. What is equity? Equity is the difference between the market value of your home and what you owe on that home. So if you could put your house on the market for $300,000 and you owe $100,000, that means you have $200,000 in equity. That equity can be used to buy a larger home. That equity could be used to purchase a car. That equity could be used to send your children to private school. That equity could be used in a myriad of ways, right? Because you're building something for yourself. 6 red flags that lenders look at and things that you want to be cognizant of in your credit. The first thing would be late payments. If you are paying any of your bills 30 to 60 days late, that's going to show up on your credit. But that's not the end of the world. All you have to do is create a plan to pay those bills on time for 6 months, 12 months, and the late payments will begin to go away. The new good payments will begin to take precedence and your credit score will go up. Red flag number 2, utilization. How much do you use those credit cards? You should only have a balance of below 30% on your credit cards. What does that mean? That means if you got a $500 credit limit and you have $500 that you owe on that credit card, your utilization is too high. So you need to pay it down below 30% of your credit balance. That will shoot your credit up. Red flag number 3, collection accounts. You had a credit card, you had a car, you had some other revolving debt, and you didn't pay it off, and the creditor decided to put it in collections. That's going to show up on your credit report as a collection account. Now, you can do something about this. The first thing I would suggest you do is figure out how much money you can put aside to satisfy this account. What does that mean? Let's say you owed $100 on that account. You can reach out to your creditor and say, listen, I have $50. Will you settle this account for $50? If they agree, you tell them, hey, I'm going to pay you this $50, but I need you to write me a letter showing that I've paid this $50 and you consider this account settled. Once you send them that $50 payment and you get that letter saying it's settled, it'll show as a settled debt. It's not 100% clean, but it is getting you closer to your goal because this is going to help to increase your credit score. Red flag number 4 is a charge-off. This means that you never paid the debt and the creditor decided to just write it off. They wrote it off, you didn't pay. Well, it's going to stay on your credit for 7 years. So the thing you want to do with a charge-off is the same thing you want to do with ones in collection. If you have something in collection or a charge-off, you want to reach out to that creditor and try to settle that debt. Because once you've settled it, if you can't pay the full amount, and you can come to an agreement to settle it, that's going to show better on your credit because you made an attempt to pay it. You've made an attempt to settle that with the creditor. Red flag number 5, bankruptcy or repossessions. Now this is going to hit your credit hard. Bankruptcies usually stay on your credit 10 years. Repossession will stay on your credit 7 years. But you can offset this going forward by paying things on time. If you're starting new accounts, make sure that you only start accounts that you're able to pay every month without fail. That will offset the negativity of the bankruptcy and the repossession. Maybe not right away, but it's a process to rebuild that credit after one of these issues. Red flag number 6, too many hard inquiries to your credit. What does this mean? This means that you apply for too many things at one time. And it does show on your credit whenever you apply for something. So you apply for a car, then a personal loan, then you went and got a credit card. All of these are hard inquiries, and it is going to affect your credit. So you want to limit the amount of things that you're applying for at one time and spread them out over time. Because what this says to a creditor is you are not responsible with using your credit because you're applying for too many things at once. I'll talk to you about the 5 fastest ways to boost your credit. The first way is to dispute errors on your credit. The first thing you want to do is you want to go to freecreditreport.com. This is a free service, so you can pull at least one credit report so that you can see what's there. You want to make sure that everything on there is correct and accurate. If you want to go a little deeper into seeing your credit report, then you want to go to Equifax, TransUnion, and Experian because they may have different things on each credit report. This is going to cost you a little something, but if you purchase your credit report, now you can see exactly what's on each credit report. You can also order a FICO score, which is the score that determines how much credit you can actually obtain at any one time. The second way is to pay down your balances. You want all your balances, your credit cards or any other outstanding debt other than, of course, maybe your car loan or whatever, to be below 30%. So what you want to do is you want to take a look at all of your credit accounts, write them all down, look at how much you owe, and then set a plan to pay each one of those debts down to below 30% of what you currently owe. This is going to dramatically increase your credit score. Way 3 is to set up auto pay. Now, I know that auto pay is a big thing because sometimes we're moving things around. We don't know if something comes up that's going to mess up our auto pay. But here's the thing, you can set up auto pay for just minimum payment so that you know that it's going to be paid on time. You can also, if something comes up, you might go in and turn off auto pay for that month. But make sure you turn on auto pay so that you can make sure everything gets paid on time. This is definitely going to help your credit score. Way 4, a secured credit card. So if you don't have a lot of credit and you're trying to establish or build your credit, this is a perfect way to do it because it is backed by your cash. Make sure that you get a secured credit card that reports to all 3 credit bureaus and that has no annual fee. This is going to now give you credit where you didn't have any. And as long as you're responsible with that credit, it should shoot your credit score right up. Way 5, if you have some accounts that you're not using, so let's say you paid down your credit at one point and you have some accounts that you're not really using, make sure that you use them just small increments because the longer you've had credit, the better it looks to creditors. So let's say you've had a card for 3 years, you paid it down, you decided, hey, I'm not going to use the card anymore. Instead of closing it, maybe you just put a little bit on it every other month or ever so often just to keep the longevity of that account on your plus side. Now here's another way to really ramp up your credit. It may not be the easiest way, but it is a way. And that is becoming an authorized user on a family member or a friend's credit who has really good credit and they've had it for a really long time. Basically what you're asking them is, hey, will you add me to your credit card? I won't have the card, I won't be able to use the card, but piggybacking off of your credit is going to make my credit better. Now, For those who might not understand that method, they may be a little leery because if you haven't been the best with your credit, they might be afraid that you will mess up theirs. So you will have to explain to them, listen, I don't want access to your card. I won't ever use your card. All I'm asking you to do is add me as a user to your card. It makes my credit better. We discussed the fact that you should be a homeowner and the fact that I'm going to help you get there. Renting should be a short-term solution, not a long-term game plan. Every month that you are paying rent, you are paying a mortgage, just not yours. You're paying your landlord's mortgage. So when you're ready to stop paying their mortgage and pay yours, I want to help you do just that. There's a free guide in the description, the 7 things you need to do before applying for a mortgage. Now, even if you're not ready to apply, but you're ready to get your credit in order, this is the guide for you. It's free, it's in the description. Make sure you get that guide and comment about questions that you have about the home buying process. The more that I know what you want to know, I can answer those questions for you. I'm Tara Tillman of Westchester Realty. Please like, share, and subscribe, and also let a friend know about our content. Let them know that we're preparing you for home ownership.